The first area we're going to look at is the oil market. One interesting aspect about socioeconomic theory is our feeling that social mood is an instantaneous and unremembered thing. It flows through our minds, we all participate in it, but we forget it. And that's why people can make the same market mistakes over and over and over, because they forget what kind of things they were thinking about at the time. You know, there's oil flowing out of the Dakotas right now like crazy. They think now there's as much as there is in Saudi Arabia, for example. But do you really remember how people were feeling back in 2006? Most people have completely forgotten about it. They're still thinking, well, I wonder what's going to happen next to make oil go up or down. But at that time, they had the case solidly that oil was about to disappear from the face of the earth. So this is back in 2006, 2008, when oil was in a great bull market. This part of people's minds does not like to act without a reason. So even though the herd was moving into oil, prices were going up, it was an unconscious cooperation of investors moving that price higher. They wanted some reason why they should believe it was going a lot higher than whatever price they had just paid for it. And this reason came out in the idea of, quote, peak oil. We were never going to have enough oil. And personally, I've never seen anything like this in my whole career. We counted upwards of 40 books, 40 books that came out saying the end of oil, oil's going to the moon in price, ultimately infinity, we're going to run out. So you saw titles like this, The Coming Oil Crisis, The Impending World Oil Shortage, The Party's Over, Twilight in the Desert, Beyond Oil. In other words, we're going to have to look for other sources of energy. The Empty Tank, and of course the linear projection from highly qualified people, such as oil is going to go to $200 a barrel. Well, here's what oil was doing in the summer of 2008. You can see why someone using this object through space model, this idea that if something is moving in one direction, it's going to continue unless something completely untoward happens to change that momentum, that direction. So the linear forecasters were out in force here. Well, we have a different model. We have a fractal model, which means we're looking for indications that enough subdivisions in the trend of psychology have happened, that extremes of fractal projection are occurring. So this was a chart that we published in June 2008. This was just a couple of weeks before the high. And notice we were quite bold in this case. We said there's a spike top due in crude oil in the $160 to $189 range. Now, why do we say spike top? Because fifth waves in commodities tend to peak that way. They tend to peak on maximum excitement and fear. And here's what happened immediately thereafter. As it turns out, we weren't bearish enough because it didn't even make it to $160. It topped at $147.50 and then did that. Now that was the biggest collapse in any commodity in 5 months that I know of, 78%. So again, linear forecasting told you one thing. Fractal forecasting at least gave you an opportunity not to get caught in that kind of drop.